Aloha, this is Fred. A bunch of people have been calling me asking me what I think interest rates are going to do. First of all, if I could predict what interest rates are going to do, I should be in horse racing and not what interest rates are going to do.
Buy or sell Maui real estate, Romvari Realty.
That being said, there are trends. I've been doing this for over 38 years. Before I came to Maui, I used to own a mortgage company, so I used to watch interest rates on a daily basis and sometimes an hourly basis to lock in rates. So when I say that there's things that we can look at for trends, I'm literally saying that with kind of a trained eye. Let's just go over what the overall trends have been for the last 20 some years in interest rates. And I've got me that we're going to go over real quick just to give overall trend. So back here was 2000. So interest rates were high in 2000, and then they came down to 2003. That was when the stock market crashed. That was when the dot-com bubble happened. There was big vacancies throughout the United States. We were in a big recession. So in general, when the stock market's not doing well, people put their money in the bond market. This chart is the 10-year treasury chart, 10-year bond. The 10-year bond is what tracks 30-year mortgages. What the Fed does is they use short-term interest rates, the federal discount rate, but that's for banks and prime lending rate. Doesn't really always affect long-term rates. If you can see, this is the 10-year treasury. It went from 2000 to 2003. We had a big drop. And then interest rates went back up again to about 2007 here. 2007 to 2010, we had a really big drop again. So interest rates went down, the economy was bad, people were taking their money out of the stock market, we had bank failures, people were worried about their money, so they were buying T-bills and bonds. When people buy T-bills and bonds, the price goes down because they can offer a lower and lower and lower yield, which in turn makes a lower and lower interest rate. And then over here in 2020, we had another event. We had COVID. And when we had COVID, you can see interest rates drop dramatically again. That's because we had trillions of dollars input into the economy and rates went down to basically zero. Then inflation hit. Then the Fed raised interest rates again, and they raised them very dramatically. They raised them from here all the way up to here. Now I drew this trend line here. If you look at it, this trend line goes all the way back, and it goes back to 2005, how interest rates came down to that. And then in 2007, interest rates broke through that. Interest rates hit that trend line again, and then they went down. So in general, over a 20-year span, you have interest rates going down, then they pop up to about the middle, the median. Interest rates go down, they pop up towards the median. Then we had basically, let's call it 10 years of interest rates kind of going down, and now we've had a drastic raise in interest rates. So where do we think interest rates are going to go in the next couple months, in the next year or two? Well, when there's a trend like this up, as you can see, when there was a trend like this down, it rotates back to the median. Same thing here. If there's down, it goes back to the median. So what we can expect is that interest rates went up over the next year or two as the economy slows down also, and the Fed stops raising interest rates are probably going to go down a little bit lower than the median. I'm going to switch charts here real quick to a shorter term chart to show you what's going on. All right, so what we have here now is the 10-year treasury or 10-year bond chart for the last year, from March of 2022 to the current. So let's go over this a little bit. We did the long-term trend, and we could see that interest rates went down, they spiked back up. Now on a shorter term chart, we're going to see where the shorter term trend may be. So again, in March of 2022, interest rates were low. They spiked up all the way to November of 2022. Interest rates for 30-year fixed rate was at 7.25. 10-year bond was at about 4.3. And then from November, things went down. And things don't ever go down in a straight line or up in a straight line. So things that went down bounced around. And what I did is I drew some trend line here for everyone. Here's a trend line, downward trend, downward trend. And since November, interest rates are going down. Even though the Fed is raising short-term interest rates. We've had interest rates raised, short-term rates are going up, while long-term rates are going down. So, with the long-term rates going down, in this channel, if we look, just a little while ago, in April, we had towards the downward trend. And since April, they've come up a little bit. Right now, we're in the median. The general trend over the 38 years I've been around, every spring and summer, interest rates go up because demand for loans in the housing market goes up. Every winter, usually rates go down, except for this last winter, which was an anomaly. Let's just call it an anomaly. So in general, interest rates in the spring and the summer are going to go up. So if they go up, they're going to maybe hit this trend line again. And then after that, when they hit the trend line, they'll go down. So in the fall or the winter, my prediction is that interest rates are going to go down a little further. If you have any more questions, please give me a call at 808-419-3061. Let me know if I can help. Thanks a lot.
Buy or sell Maui real estate, Romvari Realty.